Good evening, guys. It's Sterling here with the Daily Market Preview for August the 9th, 2018. Let's go ahead and go through the dollar-yen here to begin with. The dollar-yen, we had an open bias yesterday. The only point that we had any contact with was our lower level. That was the 111.02 point. And you can see here that when you came into it, you opened and closed below it with two consecutive candles, which tossed that point out. As far as today is concerned, I'm going to keep the open bias on the dollar-yen because, we've just continued to slide to the downside. We don't really have a clear starting point for a first push. And also today's move was a little bit shy of 90% of the ADR anyways. And therefore, we'll keep the open bias. So to the upside, I'm going to add in the New York highs. That's at 111.17. And I will also keep in 111.52 in addition to 111.86. If you're not sure why 111.52 as well as 111.86 are in place or why they're in place at that location, you can go into yesterday's preview as we already covered those yesterday, so I don't recap them again and again if we leave in the same points if the market is in the same general area. So you can go back and check that out if you did not see that yesterday, but the addition of 111.17 is the first upper point because I am a bit more biased to the downside anyways, so maybe being a little more aggressive with the selection of that point as it is somewhat of a smaller point compared to the others. To the downside, we had 2 points in yesterday. 111.02 broke, but 110.62 is still in place. That's this level right here. It's a pretty significant level. This is a 4-hour chart. If you're seeing an overall low or an overall high on a 4-hour chart, that's not a small point. So the other factor to consider here is that there's nothing else to choose from. It's the only low in the area. So anybody on the long side of the market, you'd have to be looking at and paying attention to this level potentially. So I would expect that to get a lot of attention and therefore be a decent point for a stop run if the intention is to drive the market long after coming into that level. So we'll wait and see what happens with that. The other pair we had in place was the Aussie, and the Aussie we were looking for a third push up. I would say we got the third push to the upside. It didn't break the previous highs, so not your typical third push, but in this case, very deep retracement, which is what allowed for that to be a full 90% of the ADR push. And in this case, being that you're also running into some rather significant upper levels, calling it a completed cycle and opening up the bias and trading with an open bias, I don't think is a bad option for the Aussie. But for today, I'm going to go to a different pair other than the Aussie. I will keep in the dollar-yen from yesterday, but for today, we're going to go with the euro-dollar. And essentially, this move, we very well might have a first push up, but given that this spanned into the next day, it wasn't 90% of the ADR on the first day or within that 24-hour period. If we make a second push, I'll maybe make an allowance, call it a first push then after we get the second push. But for today, I'm going to keep it as an open bias. If we get the second push, I'll probably call it a second push, look for the third tomorrow. But I need a little more clarity on that. So sometimes you need a little more information until you get that information. Trading with an open bias is the option you have, or moving away from that pair. So to the upside here, we have a pretty significant upper level that we're going to run into at 27. The open of this candle is 16.27 even. That's why that is rounded to, again, one spot, 16.27. And then the overall lows on the day. I like this point. If we are going to continue up, same principle of what we talked about earlier with the upper level. Anybody on the long side of the market, short term, today it would officially be underwater. You see a break of that point. So a pretty solid level there at 15.76, and that will be the first lower level in addition to one spot 16.27. As you zoom out, what you'll notice is that there's really not a whole lot beyond that one spot 16.27 level. So it becomes a pretty significant point in that there's really not a whole lot else there's really nothing else to choose from. So continuing beyond that level, there's nothing I would choose to the upside beyond these absolute overall highs. If we got there, we had a stop run at that point. Obviously, would look to trade it. It's just 2 times ADR, so I won't list that point as I generally only list out to 1.3, 1.4 times ADR roughly. As we look to the downside, going out to the 4-hour chart, you have a clear low here and then absolute overall lows. Both points are within reason. I mean, you could hit both points today. Maybe not likely. Take some slightly more aggressive than normal selling off on maybe some news, something that hits the market. But I think it's possible, and being as large as it is, I think it's worth listing also with the fact that there's other levels in the area, so I'll walk through why I would choose this point here, 1533. And the first reason, I'm going to go to the daily, because this will, actually, now the 4-hour shows this a little bit better. So I'd go to this point because it's the more recent level, and let's say if this point was a pip or two lower, I wouldn't worry about going to that low. I just think the more recent level is going to get more attention, and why I would rather go to that point. And then obviously the absolute overall lows is pretty obvious. It's the absolute overall low. If you go out to your daily chart, there's really nothing below that, going all the way back to 2017, somewhere mid 2017. So pretty significant overall low here, and be a definite level we'd look at if we came back into that point. So that goes to the 21st of June, and if we zoom in on 21st of June, this is the point that we've marked in the past, but the open of this candle is 115.12 and 4/10, so we can round that to 115.12, and that would be the final low. The distance in between that and the next point is a total of 20 pips, so there's more than enough separation, or 22 pips. So more than enough separation to leave both those in, and that means we have 3 lower listed levels here today. So that will do it for today's daily market preview. I'll see you guys back in the room tomorrow for the New York session, 9:15 a.m. Eastern. Look forward to seeing you guys there. Until then, happy trading.